This is a presentation on royalty account. A royalty is an amount payable to the owner of an asset for granting right to another person to use the asset. Now, the amount of money payable depends on the volume of production. This means that royalty varies. The amount of rent paid is fixed. This is why it is different from royalty. The owner of the asset is the landlord. The user of the asset is the tenant. So royalty is different from rent. Rent is fixed, however, royalty is different. Royalty varies. Royalty is not fixed. Royalty varies depending on the volume of production. Now there are three types of royalty: the copyright royalty, patent royalty, and mineral royalty. Copyright royalty is when an author gives permission to produce and sell our books. Patent is when is a transfer of right from an inventor to another person, while mineral is the levy paid by the tenant to the landlord for to explore the mineral resources in the land of the landlord. Just like the federal government is paying those in the Niger Delta region for exploring the oil in their land. Concept of royalty. We have minimum rent, which is also known as dead rent. This is the minimum amount that can be paid to the owner of the asset. Minimum amount. So in other words, whether production takes place or not, minimum rent is the amount that the landlord is entitled to. Short workings. Short workings is the excess of minimum rent over royalty payable. The excess of minimum rent over royalty payable. In other words, the royalty that should be paid compared with the minimum rent, which is the amount the landlord is entitled to whether production takes place or not. Excess workings is when the royalty payable is greater than the minimum rent. Then we have the short workings recoupable. This is when a previous short workings is recovered by the tenant when there is an excess workings. So it means that when short workings are not paid, when a short workings happens and is not paid in a particular period, if by the next period there's excess workings, the excess workings can be used to recoup the short workings of the previous year. Now, royalty paid must not be less than the minimum rent. Royalty that is paid must not be less than the minimum rent. The minimum rent is just the minimum amount that the landlord is entitled to. Now, what are the accounting for royalties? There are two methods. We have the minimum rent method and we have the conventional method. So whichever method, the entries of, of the two methods are highlighted here. For the minimum rent method, the books involved include the minimum rent book, the landlord, short workings, income statement, royalty, and cash. However, when in the conventional method, you have the royalty account, you have also have landlord account, you have the short workings account, just as you have, but the difference is in the accounting. Difference is in the entries. The difference is in the entries. The difference between the minimum rent method And conventional method is in the entries. So, but whichever method is implemented or employed to account for royalties shows the same figure at the end of the day. This brings us to the end of the presentation on royalty. Thank you.